Good morning, it's Harvey Jackson. We're just going to go through some news items here. The May to July roll seems to be causing chaos in the markets on this roll, and it tends to happen quite often. So, and then seasonality, I've just put it scattering through the presentation or whatever, just in a different way. A few different companies are looking at it. So China creates a list of U.S. made goods exempt from 125% tariffs. I didn't get into the details there, but there isn't a whole lot of products there, and China still is resisting the notion that they're talking between U.S. and Canada, or U.S. and China, and they seem to be talking to everybody else and making it very public that they are talking to everybody else as well. Um, Here's a China pivots to Europe for used cooking oil, and there's some numbers in here that probably not a surprise if you're not going to be shipping to the U.S. After they get cut off. They're going to find other markets. But the nice thing is that they are actually producing it themselves and using it themselves, and eventually will use it all for themselves. As they get these plants up and running. China reliance on soybeans is still there, and Karen Braun just kind of pointed out that they're still needing our products, but there's a whole shift of product or using products, and pork still it's actually had a bit of a slowdown for a while, and the economic growth, and this is basically here, the economic growth is actually maybe impeding the biggest increase in soybean and soybean meal usage. So I just grabbed this from X. And this is just a different way to look at the seasonality. And you look at how often since 1975 you find what month tends to trade the highs, and here we are. February seems to have the highs in 2025. But how many years actually? And this is probably weather related, and it's no surprise that October and December don't trade the highs as well. So as we keep on stating, the months that actually have the highs in it, and this is where you're quite low. There isn't a whole lot of years where you actually have the highs in April or in September. Just as an FYI, and here's a look at the soybean. You tend to have a lot more highs in the middle of the month or middle of the year, and these are weather-related kind of situations. This year, we actually have the highs back in February, and that's not as common. Grabbed this from StoneX, and it's a little bit dated, but just as a FYI, the green is on this side here of the chart for the price on corn, and the corn has been rallying a little bit, but you can see the trend on the multiple years is a bit higher. And the same thing you can see here on soybean trends in the last 3 and 5 year, but here we are in the current, and it's not all that favorable. And we've got a few more trades in here, but just a few more weeks. Palm oil closes lowest in 7 months as higher production stocks. So that's just another offshoot of the reason why canola is not rallying here. And then here's the outlook on the crude oil, and OPEC is still looking to boost, even though the world market is kind of going sideways here. Canola basically flat, and you can see how erratic the rapeseed is there. I'll maybe point that out as we get going here. Soybean oil is just down a hair. Crude oil is down another 44 cents a barrel. Soybeans down 8.5 cents. And your spring wheat is up, and other wheats are just basically doing next to nothing. Canadian dollars up just a fraction as well. And your feeder cattle and all your meats are basically up as well. So you can see here, and I'm just pulled this on purpose here, but looking at open interest is what I'm paying attention to, as this is the last trading day and going into delivery at tomorrow. And basically, how many of these contracts are going to go into delivery is the question, whether it goes into delivery. But you can see how erratic these price changes are on the front month. And here we are on the May contract, and it had a huge down day, and a lot of it is just how is it going to get rolled out. So there's a squeeze going on there. And here's your July, not near as erratic, but still, when we look at this, you still should be looking at pricing old crop if you really wanted to. These are still pretty good values. We've been there multiple times and pulled back in the year. Here's your new crop, pulled back as well, but love to get back up to that 678 as a target up there. Here's your rapeseed, and you can see that there's still contracts there yet to get out as well. And obviously I missed seeing that I took a screen grab with that on there, but you can see this is what's gone on. some really chaotic market values trying to get out of this last little bit of the contract here. And yet, when you look a little bit farther into the contract, you're still. This is the August contract, and it's got a decent enough support still on the upward. So here we're looking at now the NOV to NOV on canola to rapeseed, and we are $94 differential. Probably would look at $50 to $60 as probably a still being supportive. Anything above there supports canola. Here's your soybean oil futures, and we've had a few days of pullback here. We're down to the 49.2, and if we can hold up here, that would actually be very supportive for the canola. And here's your Canadian or the soybean futures, and I don't know. I put on the 200-day moving average, and it looks like it maybe trade above it a little wee bit, but and then fails. Now, is that trend going to get broken? So the 200-day moving average seems to kind of hold this market down. And the only way you get through that or you trade above it, and you would probably be bullish then. So here's your crude palm oil. This is what they're talking about. 7 months since it's been back there. And here's your crude oil. This little bit is trading down, and if you haven't bought your fuel, hope that the Canadian dollar doesn't do anything erratic there either. It's still staying in this area here. You still might be able to secure some of your fuel needs as that crude oil price goes down here. Just a quick look at wheat. It's green today, but look at the fall off that we've had in the past year. So are we going to keep falling, or are we going to actually have a bit of recovery going into the spring? So when you look at seasonality, it tends to recover here. Here is your Kansas wheat, and just looking how far back we've had this breakout or fall down, and it's been quite a while. So hopefully we can get some support there. Here's your wheats. It doesn't go up near as fast, and this is going into the end of May here as a contract. Here's your Chicago wheat. It's broke lower. Corn futures still looks like it's got some support here, even though you had a pretty bad day there. Looks like it's trading right at some of those moving averages as well. Live cattle making new highs, and so are the feeder cattle making new highs. And hogs are trying to maybe catch up as well, even though they're a little bit red today. And that's all I have for you today.